Well, hello again, everyone. Welcome to the Options Mentor. And I hope you had a great long weekend here. And if you're here in the US and had Thanksgiving. And the trading week was, of course, a little broken up with that day off on Thursday, half day on Friday. But it was a successful week with that double calendar that I showed last week, though you would have had to move off or take off rather the lower calendar a little bit earlier in the week. So now for the week ahead, what we have is a lot of Fed speakers, including on this coming Friday, we'll have Powell speaking. That'll probably be the biggest one. And also we will have, let's see here, jobless claims on Thursday, GDP on Wednesday. So there is some news out there, but I would expect that the dominant news will be the Fed speakers being topped off on Friday. So I'm going to show you a trade today where we're still going to be a little long Vega because I think it's warranted with the VIX here at 12.5 basically. And but we will mute it a little bit. We'll have a calendar, we'll have a fly. I'll show you what that's all about. Let me share my screen here. Before I talk about this trade, though, I just want to go over to the chart here, and you can see that the SPX is up against resistance again. It didn't break on up here to 46. Wouldn't be a bit surprised if we hit 46 this week, may even do it tomorrow. I'm not sure really how we'll start out tomorrow. It may be a little bullish, and then we'll feel it out from there and see what the Fed speakers may have to offer to make the market move around. But no doubt about it, with volatility here at 12.5, it's very much in the lower part of the recent range. Really hasn't been a whole lot lower than this since before 2020 and the whole COVID thing. So let's go over here and talk about this trade. Now I'm going to show it in SPX, and I'm also going to show it in SPY because it's a little bit expensive. And if you want to do it in SPY, it's much cheaper. And as always, if this trade's not right for you, please don't do it. And you really should start out on paper whenever you do any of this type of trading until you know what you're doing. That's absolutely a must. What do I mean by paper? I mean, you put the price down and you set it up like you did buy it, but you didn't actually, and then you follow along. But if we look at this trade here, what I've done is I've not gone out to this Friday. First, I've gone out to Friday the 8th. That gives us a little more room, a little flatter perspective. It actually makes the trade a little cheaper too. But if you look at this trade, what I've done here with the SPX trading at 45.59, which is where it closed Friday. Now you can move this around based on whatever happens tomorrow. But I did a 45.30 put calendar that you might notice here is 4 days wide. That gives us a little bit more long volatility than the 3-day wide and a little faster time decay. Whenever you're 4 days between your short and your long, as opposed to 3 in a calendar, you will have faster time decay. And then I went up above that about 20 points or so above where we're trading. And I centered a call butterfly that I then bought the top wing 40 points higher, 46.20, and the bottom wing of it at 45.30, 50 points lower. So it's an asymmetrical fly. If we look at these trades individually, here's the calendar. And then you can look at this trade individually. Here's the fly. So the fly's starting out with the center above the money, but it's on the lower end of it. And of course, the calendar, the reverse. The center's below it, but it's on the upper end of it. You put the two together, and you have your trade that's real. Look at the Vega number here. We're just about flat Vega, a little bit long Vega, but almost flat. And the idea with this trade is I want to get somewhere around a 7% profit and get out. So in this particular trade, which is just about a $2,000 trade if you got filled here at these prices, I'm going to look to get $140, $150 and get out. And I hopefully will get out here by this Friday. But it's okay if you have to take it over the weekend. But I think you got a decent chance if you're just looking for that 7% of being out of here on this trade by Thursday or Friday. And when you go to exit it, just put it in order at the mid price. When you see you have $140 profit, put it in order at the mid price for the calendar, send it, mid price for the fly, send it. And that's how I do it. Obviously, you can't close this all as one unit because that would be 5 legs, and you can only do a maximum of 4 legs. So let's look at this over here in SPY. So I've done something similar in SPY, with SPY closing at 455.30, trying to get my numbers straight. It's roughly 10% or 1/10 of the size of the SPX. So it closed at 455.30 on Friday. I put this about $2, $3 below the money, a 452 put, and then about $3 above what we're trading for the center of the call. Very similar. Remember, everything is 1/10 the size of SPX. Now, if you look at this here, you can see this entire trade, if you got filled at the mid, would be, probably somewhere around $350, $370, depending on where you got filled. And as always, with this, if you're doing this live or doing the SPX strat live, of course, calculating the fact that you had some fees, you don't get to trade for free. Would be great if we could, but we don't get to do that, right? We have to pay some fees. So with this trade, you could say, all right, what if I get out at 7%? It won't be a whole lot of money. Well, you can look at it two ways. One, you can get out at 7% and you're just learning, right? Or you can try to get a little more than that since it's a cheaper trade, a little less risk for you too, because there's not as much money out there. So if you want to go for a little more than 7% in this trade, you could, because it is so inexpensive. And, sometimes if you trade this, say, go for this 7 or even 10%, sometimes the numbers can look pretty funny, but you have to realize you are learning by doing it. You're learning discipline to take the trade off whenever you're supposed to. And trading is all about discipline, managing fear, managing greed. Every day when you sit down to trade, folks, or at your screen, remember that's what you're doing. You're controlling your emotions. You're controlling fear and greed. That's what this is all about. If you can't do that, you'll probably never be successful as a trader, because you have to be able to stand a little bit and not be too fearful to trade. But you also can't get greedy and go, oh, this is in the center. I know I'm up my profit, but I want out. I want to try to get more, so I want to not get out now. That's going to be a problem for you over time. So let's not do that. Sorry about the mantle clock gonging along behind me. But the thing is 100 years old and still going. I don't know if I will be. But anyway, so here it is in SPY. Over here in SPX, same trade setup. And I would look to enter this hopefully sometime tomorrow, unless there's a crazy move in the market. We open up 80 or 90 or down the same, whatever. Then you might want to hold off, right? Another day or two. Just let the market settle down. So there it is, folks. As always, make sure you tell your friends about this. Subscribe to my channel if you could. Hit the like button. Make your comments. I just answered a bunch of those today. I do like to see those. I try to respond to those. And as always, check us out over at SheridanMentoring.com, where we teach options every day. I hope you have a safe and successful trading week. Have a good one out there, and I'll be with you next Sunday again. Bye-bye.